Welcome to my 40th presentation for the team of Finance and Accounts. The topic is 24 causes that can adversely impact the financial reporting of current receivables and a list of 30 granular ways to control receivables. Overall, this is my 71st presentation considering all the YouTube presentation made so far. The professionals from the team of sales and distribution will also find this relevant. What is included in this presentation? 1. Reporting requirement of receivables as per the revised Schedule 6 to the Companies Act 1956. Definition of secured and unsecured receivables. Summary of number of causes that can lead to incorrect financial reporting as operational and unethical causes. Listing of causes that can adversely impact financial reporting of secured receivables. Listing of causes that can adversely impact financial reporting of unsecured receivables. The proposed list of 12 internal controls for trade receivables. List of other receivables and root causes of their occurrences. 9 preventive measures to control other receivables from vendors, and 9 preventive measures to control other receivables from employees, ex-employees and statutory bodies, thus making the total controls to 30. Reporting requirements of the receivables as per revised Schedule 6 to the Companies Act 1956. As per clause 4.2.7 of the Schedule 6, the trade receivables are dues arising only from goods sold or services rendered in the ordinary course of business. Hence, amount due on account of other contractual obligations can no longer be included in the trade receivables. Further, clause 4.2.8 revised Schedule 6 requires separate disclosure of the trade receivables outstanding for a period exceeding 6 months from the date of bill or invoice is due for payment. Clause 8.8.3 requires trade receivables to be subclassified as secured, considered good, unsecured, considered good, and doubtful. Definition of secured and unsecured receivables. Secured receivables are the customer's debts for which the company holds a pledge or collateral as security for payment realization by the company. Security can be a financial instrument, inventory, or property. Secured receivables are generally reported at their face value. Unsecured receivables, these are receivables without any security for payment realization. Unsecured receivables are generally reported at their net realizable value NRV, that is the estimated amount collectible after considering the likelihood of customer paying these. 24 causes that can lead to incorrect financial reporting into operational and unethical causes. For secured receivables, 7 operational causes have been identified and 5 ethical causes have been identified. For unsecured receivables, 5 operational causes have been identified and 7 ethical causes have been identified, making total 24. These have been listed in the following slides. The above number exclude other receivables such as those from the entities such as below: the vendor, contractors and service providers, employees, ex-employees and statutory bodies. So here is a list of 12 causes with respect to secured receivables that can cause adversely impact reporting in the balance sheet. So let's look at the operational causes in column 1 and ethical causes in column 2. They are not in any sequential order. So operational causes 7. Inaccurate reporting of secured receivables due to mistake in recognizing impairment loss to collaterals. Overstating the value of secured receivables due to incorrect estimation of the value of the collaterals. Inaccurate reporting due to valuation complexity of the non-cash collaterals. Reflecting receivables as secured without availability of the collaterals. Poor or delayed documentation of the invoicing or sales return or sales realization. Errors in collection tracking. Non-adherence to the accounting standard. Ethical causes. 5 ethical causes. Manipulating the value of collaterals. Intentionally overstating the value of the pledged collaterals in the financial statements. Fictitious collaterals. Deliberate inaccurate aging analysis and not transparency in the disclosures. Let's look at unsecured receivables, 12 causes which can cause adverse reporting in the balance sheet. Operational causes 5. Column 1. Underestimating the doubtful receivables, mistakes in aging analysis, incomplete tracking of the collections, errors in collection tracking, and not adherence to the accounting standard. Unethical causes: deliberately misclassifying doubtful receivables as secured, bill and hold invoicing but not shipping the material is something very critical, understating receivables amount through manipulation, including receivables towards export invoices where bill of lading not yet been received from the shipping fine. That means the ship has not yet sailed. Deliberately delaying the write-off of the bad debts, non-disclosure of the receivables from the related parties, and misrepresentation of the collection expectations. These inputs are based on my good amount of experience in the auditing function also. Now, proposed list of 12 internal controls for trade receivables, that is the receivables from the customers. Now, invoice and ship against collaterals for type of ships who may default. That means the invoicing and shipping must happen against collaterals. 2. Sales against advance from the specific type of customers who may default. So, in case collaterals are not possible, wherever possible, take advance from the different type of customers. Setting up different credit limits for different kinds of customers, such as customers can be OEM, institution customers, government customers, channel partners, retailers, direct customers, and export customers. And the export customers can also fall in the above 5 categories. Install robust monitoring system such as automating system for emailing follow-up reminders specifically to individual customers. Using call centers for follow-up specifically with individual customers. Availing of the SMS services for follow-up especially with the individual customers. Configuring credit locks in the ERP or software for the defaulters. Empowering only senior management for opening the credit locks. This is a perpetual problem in the industry that often in order to enable sales, the credit locks are not put in time or opened by unauthorized persons. 9. Regular reconciliation of the accounts and settlement of the books of adjustment with the high value customers. Another important aspect which is usually ignored. And pursuing legal action only as a last resort. Sources of other receivables. There can be any of the following types where the receivables can be caused. 1. Vendor or contractor, service providers, consultants, and related companies. Employees or directors, ex-employees, statutory bodies. Preventing materials to control other receivables are listed in the following slides. For vendors or service providers or contractors or consultants, advance the root causes are advance of any type given without a bank guarantee. Rejections, defective supplies or services at the receipt stage occur against paid supplies or paid services. Rejections or defective supplies observed at the work in process stage or assembly stage or end product against already paid supplies. Short supplies or short services or wrong supplies of material against LC or paid materials. Retrospective rate reduction against past paid supplies, services or otherwise. This is also important point. Excessive payments made by mistake. Equivalent value of the job work material not returned and debited. Till the time it is debited, it remains inventory. 9 preventive measures to control other receivables from vendors and contractors. So these are limited to vendors and contractors. 1. Design, implement and strict enforcement of authority norms to address root causes. Installing a rigorous monitoring system for each cause. The causes which I have mentioned, for each cause, installing a robust monitoring system. Implement ways to eliminate root cause. Regular reconciliation of accounts. Recover other receivables from immediate payments due to vendors or contractors or service providers or consultant. This is also sometimes important because sometimes the purchase or contract persons, they do not allow deduction of recoverable from the due bills of the vendors. 6. Obtain free supplies or services for an equivalent due amount. Recovering money through checks or demand draft. Enforcing lien on the equipment, tools, jigs and fixtures of or bill of materials of contractors available at the buyer site or otherwise. That is allowing these to be moved back to contractor only after the due payments have been received. A bit coercive, but one has to see how to get this money back. Seek sister company organizations help in case of common vendors or contractors for recovery or restrain future purchase orders on such vendors. And last resort, of course, is legal recourse. Now, this is a slide which shows in 3 columns 9 preventive measures to control other receivables from employees, etc. So, row number 1, the column number 1 is entity, column number 2 is the root cause for other receivables, and column number 3 is the preventive measures or controls. So these are also 9 preventive measures for 3 of these categories. So row number 1, employees or directors. Root cause for other receivables that are overdue are again similar to earlier customers. Advance against advance or loans against excess payroll payment. This is the root cause. Preventive measures are sanction of the advance only by the authorized person, insisting on collaterals and proper documents with defined recovery period. This is, for example, if the loan is to be given, insisting on collaterals, deduction against salary and any other dues to them, recovery money through checks and demand drafts. There can be compromises on this, particularly in case of directors or in case of the money has been advanced to union leaders, ex-employees. The root cause is continued salary to left or resigned or terminated employees because of system weakness, internal control weakness. Preventive measures, timely communication to the payroll and finance team about any employee leaving for whatever reason. Recovery of the money at the time of full and final settlement before giving a leaving certificate or experience certificate. Recovering the money through checks or demand drafts. Statutory bodies. The root causes for receivables are any earnest money deposits or security deposits or bonds or guarantees and bank guarantees given. Preventive measures. 1. Sanction by an authorized person only. Sanction of the earnest money or security deposit or the guarantees by a senior level person. 2. Timely monitoring of the due dates and recovery or relinquishment of bonds and guarantees. This is generally found to be a weak point. Building on the profitability and ethics, my second book was released in November 23. This blog highlights 24 causes that can adversely impact the reporting in the balance sheet and ways to control receivables. My forthcoming third book will dive deeper into the innovative balance sheet strategies and ethical practices that can unlock profitability. You can Also refer to some of the articles of your interest on my website and Facebook and LinkedIn. As of date, there are more than 1.1 million views of my articles on YouTube plus Facebook, and more than 15,500 hours have been viewed. The YouTube videos have been viewed. Thank you very much.